Good morning, children. We are meeting here in the session 2 of Fundamentals of Partnership Accounting. I hope you all have studied the portion which we covered in the previous session, and this session 1 was left at a point where we were doing preparation of profit and loss appropriation account. A quick recapitulation of that. On the debit side of profit and loss appropriation account, we have written all the expenses where the firm will be making some payment to the partners, like interest on capital, partner's salary, commission to a partner, or any transfer to reserve, and then dispersal of share of profit to the partners. On the credit side, we are having the transfer from profit and loss account in the form of net profit, which is a usual case. Sometimes it can be net loss. If it is net loss, it is written on the debit side. And then, very important thing, interest on drawings, because interest on drawings a firm receive from the partner, so it becomes a sort of income for the firm, right? Then if there is finally loss to be distributed, then that will appear on the credit side of profit and loss appropriation account. Now, continuing the discussion further, we will be finding out the journal entries which have made preparation of profit and loss appropriation account possible. Relevant journal entries for profit and loss appropriation account. First entry is for transfer of profit from profit and loss account to profit and loss appropriation account. The journal entry is profit and loss account debit to profit and loss appropriation account. And reverse will be the entry if there is net loss in the profit and loss account. Reverse entry will be profit and loss appropriation account debit to profit and loss account. These entries are quite simple, as we used to do in case of trading account for transferring gross profit or gross loss. Next thing, for giving partners salary. Partner's salary is first given to partner's capital, that means transferred to partner's capital. Being an expense, it has to be debited. So partner's salary account debit to partner's capital account or current account. I'll be explaining the current account concept later on. Then, for closing this nominal account, it has to be transferred somewhere. All nominal accounts are closed by transferring them either to trading account or to profit and loss account. You have learned till now only this thing. But if it is partner salary, it will not be placed in profit and loss account. It will be closed by transferring it to the profit and loss appropriation account. Right? So this is a common entry for partner's salary and commission. Partner's salary oblique commission account debit to partner's capital account. Then for closing the nominal account, profit and loss appropriation account debit to partner's salary oblique commission account. Just see the effect. In this way, basically, the partner's salary or commission account is getting closed. So alternatively, it is possible to pass an entry where we are doing profit and loss appropriation account debit to partner's capital account. It is the net result of the previous two entries. So either we can pass the two entries or we can pass alternatively the single entry. I hope this is clear. In the same way, we will be doing the other entries also. See here. Now it is for interest on capital. First method, when we are passing two entries. First entry will be interest on capital account debit to partner's capital account, right? And for closing interest on capital account, it will be profit and loss appropriation account debit to interest on capital account. Alternatively, when we are not passing two entries, we are passing just one entry, it will be profit and loss appropriation account debit to partner's capital account. I hope this much is clear. It is just like the previous thing which we have done, partner's salary and commission, right? Now, next is interest on drawing. You know, for charging interest on drawing, reverse entry will be done. Interest on drawing is an income, so it has to be credited. Then what is to be debited? Obviously, partner's capital account. Partner's capital account debit to interest on drawings account. This entry is clear? right? Then for closing interest on drawings account, which is a nominal account, interest on drawings account debit to profit and loss appropriation account. Alternatively, again, we can pass a single entry for the above two entries, which will be partners capital account debit to profit and loss appropriation account. This is clear? Now moving on to next thing. If we have to make some transfer to reserve as we did in the account, the reserve amount will be credited in reserve only through profit and loss appropriation account. So profit and loss appropriation account will be debited to reserve account. It can be general reserve, it can be any other reserve, right? Now seventh, for transfer of credit balance of profit and loss appropriation account, it is nothing but the divisible profit. You remember on the debit side we were having the to profit transfer to entry. So it will be profit and loss appropriation account debit to partners capital account. It is for distribution of divisible profit in the profit sharing ratio. Reverse case, if there is finally divisible loss, then partners capital will reduce. And when partner capital, a sort of liability reduces, it has to be debited. So partners capital account debit to profit and loss appropriation account. I hope these journal entries are quite clear to all the children. Yes? Okay. Now we are doing features of profit and loss account. Profit and loss appropriation account. First, it is an extension of profit and loss account. Means like trading and profit and loss account is one account. Trading account, then after that it is extended in the form of profit and loss account. Then further it is extended in the form of profit and loss appropriation account. Second, it is prepared by partnership firms only. You know that in sole proprietorship we never used to prepare P&L appropriation account. So it is prepared only by partnership firm. Third, it shows the appropriation of net profit or loss for the accounting period. Here appropriation means distribution or division of net profit or net loss for the accounting period between partners. Fourth, entries in this account are passed giving effect to the partnership deed, means we are just taking care of the provision of the partnership deed, and accordingly we are paying interest on capital, salary, commission, and charging interest on drawing. So we are giving due respect to the provisions of partnership deed. I hope this is clear. Moving on further, there is a special note. Let's be very careful while reading it. If a partner has given some premises to the firm for use, right, and rent is paid to that partner, this rent will be treated as normal rent which we pay as an expense. So it is a charge against profit. That means it will be shown in profit and loss account, not in profit and loss appropriation account. It is treated as normal business expense. It is not allocation of profit. So, for the calculation of net profit, this item will be deducted. So, in case net profit is given in the question without deducting rent paid to the partner, you have to first deduct the rent paid to the partner from the net profit to find out adjusted net profit. Then only you can start preparing profit and loss appropriation account. Same way, interest on partner's loan and manager commission also are treated as charge against profit, not appropriation of profit. Thus, they will be deducted in the calculation of net profit, and then the adjusted net profit will be used for further appropriations. I hope I have made myself clear, children. Moving on further. We are now doing one illustration, a practical question. Let's read the question very carefully first. Only then we can proceed for the solving of the question. Let's read the question carefully, children. Aman and Bowman are partners sharing profits equally. Business is being carried from the property owned by Aman on a yearly rent of rupees 24,000. Aman is to get a salary of rupees 1,20,000 per annum. Note, it is per annum, not per month. And Bowman is to get commission at the rate of 5% of net sales, which during the year. amounted to rupees 30 lakh. This is the amount of sales. So 30 lakh, 5% of that, Bowman's commissions comes out to be 1,50,000. Then profit for the year ended 31st March 2020 before providing for rent was rupees 5 lakh. Please notice that this net profit has been calculated before providing for, that means before deducting rent payable to Aman for the use of his property. That means now we have to calculate the adjusted profit. We cannot use this 5 lakh as it is for appropriation. First, the rent has to be deducted out of it. That means the net profit which should be transferred from profit and loss account to profit and loss appropriation account should be 5 lakh minus 24,000, that is 4,76,000. Now let us see how profit and loss appropriation account will be prepared. See here, this is the solution. Profit and loss appropriation account, don't forget to write for the year ended 31st March 2020 as we used to do in case of trading and profit and loss account. On the credit side, see here, the profit and loss account on the credit side we have written 4,76,000. Now comes to the notes portion. In working notes we have shown rupees 24,000 is the rent which is charged against the profit and hence debited to profit and loss account. Thus amount of profit available for appropriations is 5 lakh minus 24,000, that is 4,76,000. On the debit side we are giving salary to Aman. Remember it was 1,20,000 per annum. So we are not supposed to multiply it by 12. So it is 1,20,000. Then Bowman's capital account, it is his commission. His commission was 5% of 30 lakh means 1,50,000. Then after that we have to calculate the distributable profits. So 4,76,000 minus 2,70,000. When I say 2,70,000, it is total of 1,20,000 and 1,50,000. Is it clear? Then after that what I am getting is the profit, distributable profit, which is 2,06,000 distributed equally among the partners. Since the ratio is not being mentioned in the question, we'll assume it to be equal. So it is 1,03,000 each for Aman and Om. I hope the preparation of profit and loss account is clear to everybody. We have done one illustration. In the next session, I'll be introducing the concept of fixed and fluctuating capital accounts. And with that, lots and lots of questions will be solving together. Thank you, children.